In this video, I want to show you a trading strategy where we want to buy and find those very large explosive momentum extensions. And those momentum expansions often happen with very specific signals around it, and that's what we're going to find in this video. But first we have to set up our charts together. So the first thing that we do is to get the sessions is we just type in session, and then here we have the built-in trading sessions indicator. We can open the settings here, and we don't need really the labels. We don't need that. We don't need this as well. We just want to see where the session is and the name for the session. And then the second part, very simple, we just put in BB for Bollinger Bands. We open the settings here for the Bollinger Bands again. And here we don't need a background, and this is just cosmetics, right? So just bases and background, we turn it off. And now we have a good charting environment that we can work with. And a pattern that you will often see, obviously nothing works 100%, but something that you will often see is that you have trading sessions where absolutely nothing happens. So here we have the Tokyo session where the market essentially just went sideways in a very, very flat range. You can see how close the Bollinger Bands are here. And this is what you call in technical terms a Bollinger Band contraction. So the Bollinger Bands are coming together, which essentially means that you are trading in a very narrow range here. And then as you move into the London session, right, here we can see we have the London session. In the beginning, not much happens. And then you have those big, big explosive expansions out of a range. So what we want to do is we want to try if we can identify here ranges. You can use trend lines. This trend line doesn't really fully align. So let's see, here we have a horizontal level that is really great here. We can build very good resistance and support with horizontal levels. And then essentially what we want to do is we want to wait for breakouts. Here in that case, we can see there was a news item. So we had some news coming out of the US. US news generally impact the US dollar dominated pairs, and obviously gold is nominated here in US dollar as well. So what we can see as the news come out, the market is waking up. And this means that prior to the news, the market was in a range. The range was built because of the news. That's something you will often see before news. The market is going sideways, especially if it's a big anticipated momentum mover. So this news was a big market mover. The market was waiting for the news to come out. And you can see as the news come out, the market is waking up. And very often you will see that the news are just a catalyst for the driver. When we zoom out, we can see that previously gold was in a very strong uptrend, right? So this was the news, and prior to the news, the market was already in an uptrend. So generally, we are looking for bullish trades that go with the long-term trend. The news is then just a catalyst that gets us out of this range here, and then we trade higher at the outer edge of the Bollinger Band. That's a very, very good momentum sign. A price is only able to stay at the outer Bollinger Band if there is strong momentum. And you can see as soon as we move inside, away from the outer Bollinger Band, the outer Bollinger Band goes here, but the price drifts sideways. That's then where the trend is over. So the session is just a filter. We want to have at least one trading session where the market is going sideways. We want to be able to define the range that we have here, and then we're waiting for the breakout. We also have the news catalyst. Ideally, we don't want to trade right at the news because price at news can be volatile. The spread and the trading costs typically also increase. But in this case, you can see we get the momentum started on the news, and then afterwards you see the follow through. We can just follow the price action. You can see that the market had a good trend, but there was no sideways session. End of New York, the market price action died down a little bit. Then we move over into London, right? We have a very, very narrow price window in London and also in the New York session. Really interesting, right? So typically New York and London are very active also for gold, but in this case, that is not what happened here. Instead, we see that the market went into this really narrow range, which is unusual. So what you can then think about is that during this time, the trading activity is really condensed in this narrow time, in this very narrow price window, and a lot of pressure is building up. So what we do then is that we wait for the breakout here, And this is fantastic because right as Tokyo opens, you see the market explode, right? We have a break and a retest pattern here. We could even try to zoom in on this pattern a little bit further. So we're on a 5-minute time frame now, and we're just looking at this London and New York session. Tokyo has not quite opened yet, but we want to observe how the price is behaving. So now Tokyo's open, and you can see the market is waking up. We're taking out New York highs and we're taking out London highs. This is a very important fact when you see it on your charts, that highs of a previous session are being taken out. So we see that we have signs of a retest, but we don't have any momentum come in yet. We don't have the trend momentum that we want to see. And this is at this point a premature entry where you do have signals that the high was taken out here, but you don't have momentum. The price is still struggling inside a very small window. So you want to wait really for that momentum to come in. And at that point, this is where you have the momentum confirmation. Tokyo has been open for not even an hour, and the market is moving, and it's moving with momentum. So at that point, you are looking at a very high probability momentum signal on your charts. We can fast forward a little bit. We can also fast forward a little bit faster here. We have the deep retest, and that is something that a lot of traders also like to trade. So if you are not one of those traders that likes to trade the first breakout here, because let's be real, retests, we all know about them, we have seen them, we've been hurt by them, then you can opt for the second entry. And the second entry is something that I prefer in my trading, a retest entry, right? So you wait out for the market to sweep those stops. So we have the breakout, and at that point you have the retest, and you wait for the market to confirm the retest. The retest is confirmed once the price pushes away into the trend direction that you're looking for. And that's then where you find much higher probability signals. You can see the price spiked higher quite a bit, almost up to 4R, and then started to drift sideways as the session continued, right? So those are signals where you don't find trends that go on for days and days, but those explosive momentum expansions out of a Bollinger Band contraction can be really interesting signals for short-term traders because they happen quite frequently. So this was our example here, and then we just move on and we see when is the market doing its next range. So throughout the whole Tokyo session, the market went sideways here, right? And then you have eventually the breakout here as London progresses, and as you go into New York, again, you get this little nice momentum push into the upside, and that's where you find your little profit. Again, we fast forward, we see we have some ranges here, but nothing really tight. Then we see we have a tight range here in the Tokyo session once again. We're waiting and we want to see where's the market showing momentum. Here, the breakout happens with extreme force. So on the 15-minute time frame, there was not even enough time to respond and to act. This is because that's non-farm payrolls and employment rate. So previously to the news, the market went dead, if you want to call it that. The market just moved sideways in a very narrow range. And then as the news came out, that's where the market exploded. We can follow it. The market after NFP goes into the weekend. We have here then the market open Monday morning with a very tight Tokyo session. And then as London opens, you see you have your momentum push, and the market again started to rally after the Bollinger Band contraction here. And that's then how you can build a interesting trading strategy. Use it as a foundation. Don't use it just blindly and copy it, but use it as something that you start noticing on your charts. Try to observe, when do those contractions happen? What is the prior price action? How does the price move into the session? You can also incorporate a higher time frame approach. So before you go to your lower time frame, look at your higher time frame to understand where's the market in the bigger picture. Are we generally looking for long trades? Are we generally looking for short trades? And then that's how you can combine a multifaceted trading approach using components such as volume contraction, momentum expansion, and also the timing of trading sessions.